Hi everybody, Jared here with Day Traders FX. I hope you guys are having a great day. Today in the daily video I want to talk specifically about the EURCAD and one of the setups we have going on there. There's a lot of setups across the board that are looking kind of interesting, but the EURCAD has a very typical kind of textbook setup that we like to see. So we're going to talk about that. I have the calendar up today. You can see that we don't have anything else related to Euro or Canadian dollar or US dollar for the rest of the day, but we do have some big announcements coming up later on this evening. Australian employment numbers are always big movers. I mean, they're almost always huge movers, but we can at least count on being a pretty big mover. So just keep that in mind for any of those that are trading any Aussie dollar, Aussie yen, Euro Aussie, Aussie CAD pairs, anything like that. There's going to be some big volatility coming up in about 3 or 4 hours with those employment numbers, so keep that in mind. Coming up tomorrow, we have some big news as well, some asset purchasing, official bank rate stuff from the UK. So again, any pound pairs, expect some big volatility from that. Likewise, we will have the rate statement out of the UK, so it's going to be a big morning for anything pound related. And then followed just after that, we have interest rate announcements for the euro. So we have that coming up, and then the press conference for Europe, which is always the Eurozone. That's always a big mover. I can't remember the last time it wasn't massively huge. So big morning for pound and euro pairs. So that must be taken into account when we are discussing this EURCAD. So we've got some big news coming up, but we should still have some nice trades in the works. So let's see how everything is looking. The EURCAD is giving us an interesting setup. A couple of things have happened here. We've got a weekly pivot that it's coming up to just test and maybe hit, maybe not. We'll see how it goes. It got pretty darn close. We've got the 200 moving average, which is coming down here and kind of still weighing on the pair a little bit. We have a missed daily pivot from Friday that's way up there. Currently about 150 pips above current market price. We've got a missed weekly pivot that's a few pips above current market price. So there's some reasons for this pair to go higher, but there's also some reasons for it to go lower. And one of the big reasons for it to go lower is that it's got a very typical setup right here. We've had this big run up, and then last week we had some consolidation, and the last part of the week we had this huge drop. The EURCAD just dropped 300 and almost 400 pips, just shy of 400 pips. And so it makes this huge move down. We get this nice little hammer down here. This is a 4-hour chart once again. And after that big move down, it's starting to consolidate up. Now, for those of you that are familiar with this kind of a setup, I love to trade these so much because they're so great. This is a big bear flag. Not Big Bear. I actually used to live in Big Bear, California, but it's a huge bear flag, I guess you could say. So it's a really nice setup on a bear flag play here. We've got this nice movement down and this consolidation up. Now that typically means a continuation pattern. Down, consolidate up, break and continue down. Now if we look at this, if this thing breaks, just going back to this 4-hour chart, if it breaks and continues into those lows, that's about a 70 pip move, which isn't horrible. But I think we might have some considerably larger moves in the play in the works. Now remember, we've got this nice shooting star right here. We do have a couple of hours left before the daily close happens, but that's a pretty fantastic price rejection model right there. That's telling us that for whatever reason, this does not look like it's too much ready to get, or too ready to get too much higher. Now that's a big bullish candle right here, but that's a big bearish candle. So there's a little bit of conflict, but this is a setup that is very typical of a continuation pattern. So as that consolidates up, we expect this to break and continue down. Again, if we trade it into the lows of 140.15, that's a great move. If we start getting into some of the major support of last month of October, that takes us down to 139.50. So now this turns into a 100 to 125 pip trade, and I think it's a pretty good one if we get that move down. Now it's going to be a little tricky getting into this because there's a lot of chop and a lot of consolidation. Ideally, what we need to be doing is trading against this high. We need to be trading against the weekly high so far, which currently sits about 50 pips away from current market price. So a couple of entry ideas would be, number one, wait for some pullback and short against this high slash daily, or excuse me, weekly pivot point. And the other would be just clear, make sure we get out of this trend line, this ascending trend line, and start shorting down around 140, 70 area, 60, 70, 75, somewhere in there is a good option as well. If this does start making a run up and continues up, there's a lot of resistance that it's going into, and I'm getting a little bit nervous about looking for any buy opportunities there because of Fibonacci levels, weekly pivot points, 200 moving average, all that stuff. So that makes me a little bit cautious about what might be coming there. So look for this run, look for a move down into the weekly lows, and then potentially down as low as 130. 950, but again, it could be making that run up, so be careful with that. But I'm leaning a little bit more towards this bear flag setup playing out. Best of luck, everybody, and make sure to follow me on Twitter at DayTradersFX, and I'll have more updates coming as they pop up. Thanks, everyone.